Hello guys, welcome to another video. So let's have a quick look at Nasdaq and see if we can't find any trading opportunities. So I'm just going to break it down for you and show you how to search for trading opportunities. So let's get started. All right, so we're going to start with the highest time frames, then I'll work our way down and see, look at the bigger picture first before we drill down to the smaller time frames where we're going to be searching for our trade. So this is what we have on the monthly chart. So the monthly chart looks something like this. So it's not different to what we had the last time we looked at it. So if you're new here and this is on this channel, I just make analysis using just the price section. We don't use any indicators. So this is what we have on monthly, and we can see that the price is kind of reacting from this very strong area of resistance there at the top, because remember, this is the all-time high. The price has never been past that point, so that resistance there is very strong. So the price touched there, and you can see for the past 2 months or so the price has been moving away from that zone. Maybe the best, the bulls will just go with a small pullback before coming strongly and take it out, or the bulls could just defend their resistance and then cause a trend reversal. So we don't know about that. This is a very bigger time frame. So what we need to take from this is that the price is moving from an area of resistance, and you see here, if you zoom in here, this is what we call a bullish rejection candlestick. So monthly, last month we closed with what? Rejection candlestick like this. And remember, this is the one that suggests that the bulls are rejecting the price and taking into consideration the location where we are. This is a monthly area of resistance, right? This one here that I just marked here, right? So when you're seeing the bulls rejecting the price at a monthly bearish zone, that's the combination there does not make sense, because when you get to a resistance, we expect the sellers to be the ones that kick in, especially a strong resistance like the one we have here, the area of supply. We expect the sellers to be the ones that are showing the strength and push the price to the downside. So when we see the bulls trying to reject the price like this, we get worried. Then we wait. What's going on? Are the bulls trying to show us that they are strong enough? They want to challenge and do what? And break the resistance? We don't know about that. We'll just wait and see what happens with the next candlestick. And the next candlestick is the one that we have currently. And remember, I always tell you that when you have a bullish pin bar like this, for the bulls to convince us fully that this rejection that they caused here means that they want to push the price up, they need to at least break the range of that candlestick. So when you form a bullish rejection candlestick or a bearish rejection candlestick, you need to break the range of that so that you continue with that momentum. But when you're forming a bullish rejection candlestick like this one, only for the next candlestick to rather break, to the other side, that's more like invalidating that whatever that the bulls were trying there, which is something that we might end up with here. If you look at this, the two red candlesticks, right? So the bulls rejected the price, but then they failed to move and break the range of that. Now the sellers are trying to keep on fighting for their zone. Remember, this is their territory here, this monthly resistance, this one here that I said the price seems like it's reacting from it. This is their territory. So the bulls try to reject the price. The sellers are not allowing them to do that because the location, like I told you, the combination here does not make sense for the bulls to reject the price at a bearish zone. So now we're just saying, should the bulls then allow the sellers to move below that pin bar, then it will be over for them. It will be over for them, which means the sellers then would have a bigger chance of going for a deeper pullback to at least somewhere there. But we will see about that. As of now, the price hasn't moved lower than that pin bar, this pin bar here, which is why I said we need to make sure that we check the bigger picture first, so that when we get to the smaller time frames, at least we can make sense of what is happening there. So this is what we have. What we need to take from this, we are reacting from the resistance. Let's see how far down this thing can go, or if the bulls are not going to allow the sellers to break this and they're going to try and fight back and push it up and close with another pin bar, then that's when they will be trying by all means to break to the upside, because remember, it's not yet month end. The month hasn't, the candlestick is far from closing. So maybe the bulls will try and fight back and end the month with this candlestick being a pin bar. We don't know about that. So we'll see. So let's check what we have on weekly. So this is the structure that we're having on weekly, and we can see when the price was moving to the upside, this was a very smooth trend to the upside. It's been moving all the way up, and it seems like when we got to that daily, the monthly area of resistance, that's when here we got this, which is what bearish rejection candlestick. So this one makes sense. Why? Because you are at a bearish zone, which is an area of supply or area of resistance, and then you see the bears rejecting the price like this, unlike what we saw on the other side where the pin bar looked like this. So this one shows that the sellers that are rejecting the price, which means then we see the price breaking below that range instead of breaking to the other side, which is what we wanted. It made sense, and that's when the sellers tried to push all the way to the downside. And when they did that, they actually broke these two. They moved lower than these two, and again what they formed here at the top is this. So this pattern, like those three candlesticks there, they are giving us a very important information. Number one, the first candlestick is a bearish pin bar. All right, which means the sellers are the ones that are rejecting the price, which is something that we expect because of what? We are at an area of supply or resistance. So these two make sense. And then again, there's another point that is suggesting that the sellers are fighting there, which is what we see with what? The third candlestick that gave us what? Bearish engulfing. Bearish engulfing, which means that the sellers, their momentum was so aggressive such that the body of the candlestick that they formed moved to the downside and swallowed the body of the first candlestick. That's the bearish engulfing. So all these points are pointing to the downside, which is why when the price, after all of that was confirmed, the price did manage to move down and took out all of these guys. Yes, the price was moving up strongly, and these are areas of support that you had, but there, when you look at the odds against them, they didn't stand like a chance. Yes, they could have tried and gave us a pullback there, of which they did, but it was slightly lower than that after they've been removed. So the reason why I'm saying they didn't really stand a chance is because when you think about the area that we are at, which is a monthly area of resistance, and all these factors that we are seeing there, you can see there's a lot of pressure to the downside. The bearish pin bar as being at the resistance and the bearish engulfing, and that's when it was removed. Now that's when you're like, this guy here is the one that did what? That pushed to the downside, breaking these two here. That is why when the price went back to it, you can see it reacted and moved to the downside. This one here is not really a zone, but it did actually push the price to the upside, which means now even if the price gets to it and is not yet a zone, it can still try and hold the price again and push it to the upside. So we will see when we get to the other time frames as like what really is happening here. But on the weekly, this is not really a zone, but the fact that it held the price here, it can still hold it again. So we'll see when we move down to the other time frames. Right, so this is what we have on daily. So let's see what we have here. So remember, we need to try and still link it back to what we saw on weekly and also on monthly, so that when you make the decision whether we should be buying or selling, all this the structures that we saw on most of the time frames should link up, right? So remember, we said that on weekly, as much as this is not the actual zone, this one here that we are at, but you need to remember that especially when you find it on bigger time frames like weekly and monthly, even though it's not like a valid zone, but the fact that when the price was here, it caused it to go up, it can still hold it again. So you need to also take that into consideration. Like if you're holding a sell trade, when the price gets to this, even though it's not yet valid, but the fact that it held the price the last time it was here, you just need to take that into consideration. As you can see here, it looks like the price already is reacting to that, but we will get to that. So what have we got here? Remember, the price was moving to the upside there, and all of that changed. We moved to the downside, and we moved all the way to the downside, and then all of that changed. We moved to the upside, and now recently the price is going to the downside, with this being the closest area of resistance we have, right? The trend line was there, it has been removed. Now we are moving to the downside. If you want to draw a bearish trend line, you can put it somewhere there and say we are bearish. There is our bearish trend line, and there is our trend line. There is our resistance. So remember, I said that even though this is not like the actual zone, but I mean on weekly, but it can still cause the price to go down. So now if the price was to take it out, at least you know that it does not exist anymore, so that when you continue selling, you don't have to worry about it. So now it makes it very difficult when the price gets to this, keeping in mind that what if whatever that caused the price here on weekly causes it to go up again, which is why even though you know that your daily is going to the downside, and this is a resistance where you can look for selling trades if you're trading daily. But the fact that you know that there's some guy here on weekly that is causing it to do again, you might have to go with confirmation when you're taking that trade. You might have to wait for confirmation, because if this guy that's on weekly wins again, he will cause it to go all the way up like that. But for now, this is a very nice area for people that are trading on daily to look for selling trades if the price goes there. But for now, we need to focus on what is happening around here, so that we can decide whether this has a chance to go there or to actually break and go to the downside. So we need to try and zoom in. All right, so this is what we have. If you look at this candlestick here, so we can try and let's say let's mark our the actual zone at this time frame. We can mark it here at the pin bar and say this is our actual support at this as a swing low. On daily, yes, this is a support, a valid one, but on weekly it was not. We need to keep that in mind. So we can see that currently the price here on daily is touching that zone, and it looks like it's reacting from it. But you need to remember, it's still very early. It hasn't went anywhere. It hasn't made any strides, so it can still just move from where it is and go all the way down. So you need to be careful of that, right? So what we need to take from this is that the zone that I marked here, it's not the best because of what? It's a pin bar, right? The guys that I taught, they know that the zones that are formed by this are not really the strongest, and I gave them the reasons why, right? So we are reacting from that for now, but we need to keep in mind that we formed this. What do you call this? This is a bearish pin bar, right? So remember I said in terms of the combos, when you are at the bullish zone, the support, you expect the bulls to be the ones that are showing rejection. But when we have the bearish pin bar, that's not a good sign. We can't have the best rejection the price as the support, but also keeping in mind that we said the zone is not the strongest, so it might be taken out. So it only has a backup from weekly, because weekly says yes, this is not a zone, it can still hold. But when you look at the daily, this is not looking good. This is not looking good, because both of them are suggesting that the price can still go to the downside. And when you look at this pin bar that we're having here, the price did move lower than it. So unless if the bull says no, we are not done, yes, we did move lower than the zone, but the lower than the pin bar, but the actual zone that we are reacting from is still intact, and then they push up and then break the range of that, then they will invalidate it. But as things stand, this pin bar is still very much active, and it can still push the price all the way back, right? Unless if they go all the way up. So I'm not saying just go and sell, but I'm saying we need to be careful, because of what? This is not a good zone, and this is not a good sign. We are not just at that potential weekly support. I understand that can push up, and also we need to keep in mind, we said this is possible, but it all depends on what this current candlestick, the daily candlestick, is gonna do to that the pin bar. Because if it moves the upper side, if it breaks the range of that, then it will increase the chance of it going there and giving you a chance to sell from there. But if it doesn't, then this guy is not going to survive. Then it's going to push all the way down. And so you need to make sure that you react to what the market is giving you there. So let's check what we have on weekly. On H4. This is interesting. This is very interesting. So on H4, we need to try and change this zone and say the actual H4 zone looks something like this. We can put it somewhere there, right? So this is our H4 zone. And when you look at it, you can see that currently the price is reacting from it. Now, how do we then try and search for trades there? So we can remove the horizontal line for now. We can see that the price has touched the actual zone. Okay, I wanted to delete the zone, the horizontal line, but it's fine. So we can see that the price is touching the support, and now we just want to see if, remember, each time frame is different, so we can't use the stuff that we saw on monthly to make the decisions as to like what is going to happen on H4. We need to check the H4 first Then we can try and link what we're seeing here to what we saw on the daily and then the weekly, but we can't just let all of that cloud our judgment to to what is happening on H4. So this is what we have on H4, the price touching the support, still very much bearish. You can try and put your bearish trend line there and say that my H4 is bearish and this is my resistance. Now remember, on daily we said should the price break that high, is the same thing. That high ends here, that daily high ends there. If I can show you just now, let's put a horizontal on that H4, on that daily high. Remember that high somewhere there. So let's check, go back to H4 and see still the same. So this is that high. So it's the same thing here. If the price moves to the other side of that, it means that the bullish trend would be over, right? And when the bullish trend is out, then it means, remember I said on daily, if that high is taken out, the price would increase the chance of moving to that support, the resistance there, where you'll be searching for sell trades. So here you're just watching to see how the price is going to react. So if it breaks this, that's when you can take your buy trade and push the price up there. So that's how you should react here. So looking at the structure that we have here on H4, the bulls are really trying to fight. So they're really trying to fight, but they are not gonna pass here like it does not exist. So this is gonna give them a struggle. But if they manage to take it out, a pullback that you get is a good chance for you to try and accompany the price there. If they fail there to take it out and come back, if they fail to take it out and then come back, it means now you'll be moving to the up downside, and then you just continue selling it like that. So that's why you mustn't force the market to do something. You must wait for it to react, then you take it from there. So this is what we have on H1. So the H1 is already bullish because we can see that this is our trend line, and recently I think we're going to take it out. So now, and the area of resistance already we moved above it, so which means currently on H1 our resistance is the one above, which means is this one here. So this is our H1 resistance, and the trend line has been taken out, so which means you can talk about taking buy trades. But remember, this is the same high that we spoke about on daily and on H4. So now to increase your chances of taking that trade, which is the same thing that I said you should do on H4, is if the price was to do something like this and then remove that, which means now it will open the space to go all the way up to that zone up there. So if the price does that, then that's when you will go and say, I've got this support here on H1. If I'm trading H1, this is the same support that shot the price up and break that. That's if it takes it out. So now if the price comes down and try and retest that, I will give that the buyers at that zone a second chance and hope that they will defend it again, because the last time they were here, this showed so much strength and broke that. And now that's when you can continue taking to the upside. But for now, if you're trying to buy, you're just gonna end it here. Whatever you're trying to do to the upside, make sure that it's not past that point, because that point is very, very crucial, both on daily H4 and here on H1. On H1, not so much, because of what already the market has decided where it wants to go on this time frame. But on the other time frames, this is where it's going to decide whether the sellers continue with their downward movement or whether the bulls reverse everything completely and then continue pushing to the upside. So that's what you should look out for. I think I can end it here, unless if we want to check our M15. So this is what we have on M15. Like I said, each time frame you should treat it as an individual time frame. So we know this is when the price was reacting from that weekly potential support and the daily support and the week H4 support that I just removed. Now here is what we have on M15. M15 was moving to the downside, and we had our bearish trend line there, which was removed because of this guy, this support that removed it. And you can see that after removing it, the same support, what did it do? The same support moved the price up to there, and when it did that, that's when it moved above these areas of resistance. So which means it caused the HM15 to change the trend. Remember, each time frame will have its own trend, it will have its own structure, so you need to look at the structure on that time frame and make your decisions there. If you are someone that's trading M15, when the price pushed up until there, it became bullish, and this is the support that started all of that. And you can see the price came back to it, retested, giving you a chance to take a buy trade, and then it still pushed all the way until that resistance. And then now you can see from that resistance, it started reacting, going all the way down to the nearest support, reacted from it. Now it went all the way up, breaking this resistance, which means the target for now is this one here, which is still the same target that we said on H4 daily is going to decide whether it wants to break that and open more space to the upside, which means if you are someone that was trading M15, this was your chance to do what? To take your buy trades, because remember we said this is the decider. So when you're trading on smaller time frames, you can see when you're taking a trade there, you do have enough space to push up there. But if you're trading on H4, that space becomes smaller. So M15, there was your chance, there was your chance. Now maybe it will go until there. If it doesn't, maybe already you can see it has removed this one, right? It has removed that one. So this one that we have here, not the strongest, because of what? The candlestick that we have there. This is the one that you should be more worried about, that you can ignore. So because you're saying this one not the strongest and is not even fresh because already the price has been there, we can say that should the price pull back, you are more than welcome to try and what? Still search for your trade here. If you are someone that's trading on M15, maybe you already missed this one or missed this one. So if it comes back, then maybe that's where you can get your chance. But we're saying for now, it has a chance to push until this. When it gets to that, let the market decide what it wants to do. That's if it goes there, right? Because once that one is taken out, it means on daily, remember, if that one is taken out, it means it will have went above this, then it will open more space to go until there. Same thing we said on H4 to say that we have a trend line there. Should the price move about this, then it will open more space to go up there. So you should try and link all of them like this. So I think I can end it like this. I hope you guys can see how you should break down this structure on whatever time frame that you're trading on, whatever time frame you're comfortable with. There will always be opportunities there. You don't have to run away from this time frame and say it's not giving me anything, let me check the other one. No, stick to the time frame that aligns with your goals and also makes sense for the account, the size of your account, so that you don't end up trying to force things on H4 whereas your account is still smaller, then you end up blowing the whole thing. So if you're on M15, your eyes are on this and the target is that, which is the target that everyone is having their eyes on, to see whether the price is going to break and then increase the chances of going all the way up, or whether the sellers are going to defend that, especially on daily. Because we said if they fail to go above this, the fact that already they have this and this is not nice, they can win the battle and push all the way to the downside. So look out for that. All right, I hope you're gonna get some trading opportunities on this one. So if you've watched this far and you haven't subscribed, please subscribe, and then I will see you guys in the next video. Thank you.